Today we wanted to talk about two types of the loans for the home buyers.
Right, now these are the most common types of loans. Now there are other things that we can talk about if you are, self-employed, have your own business. You might go into a different category than these, but most home buyers are going into either conventional loans or government-backed loans. So we're just going to kind of go over basically general definitions and what they are in general.
And before we wanted to do our introduction. Let's hit it.
Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below.
The first loan that we wanted to talk is really conventional loan that is backed by Freddie Mae and Fannie Mae and Freddie Mac. And they are the most common type of the loans, no? Mm-hmm. And what is about them? We wanted to talk about the key features about this type of loan. What is the first thing?
Okay, so what is going to be your credit? Generally, they want to see that you have good credit for a conventional loan. Conventional loans come with favorable terms, but they want to make sure that you qualify, so they look at your credit score.
Exactly. What is the credit limit?
Usually 620.
620. Therefore, what is the down payment that we need for this type of loan?
Well, you don't need the 20%. That's a misconception. If you go less than 20%, you will have to have PMI. However, with the conventional loan, the PMI will fall off either when the home appraises at more than 20% of value, or if you have paid over 20, you can ask for it. And if it goes to 22 or 28%, depending on your terms, on when it's going to fall off automatically.
Exactly. Therefore, this premium mortgage insurance, you can get rid of it later if your house appreciated or you hit the 22%, automatically is going to get off. Advantage of the conventional.
Before we do that, loan limits are here. So if you're in an area where your loan has to be higher than what the government-backed loans will allow you to be, you're going to have to go conventional because you're getting a more expensive house than what the government is going to allow. Exactly. Now let's talk about the advantages.
Potentially, interest rate depends on your credit, how your credit is good. Therefore, you can potentially get a lower interest rate. No, what do you want to say?
I was just going to add mortgage insurance fees or government-backed fees. You do not have to pay those with conventional loans.
Okay, and here we don't have no upfront fee. Mortgage.
I just said that. Yeah, you're on terms. You can have a 5-year term ARM. You can have a 7-year ARM. You can have a 30-year fix. You can have a 10-year fix. You have a 20-year fix. There's various flexible term options you can have with this one. What are some disadvantages?
But disadvantage, as we said, you need a little bit higher than credit score than, for example, the government-backed loan like FHA. And what else?
You do need some sort of, if you are going under 20%, you are going to have to come with PMI. It's just part of it. Okay. Now let's talk about the government-backed loans.
Okay, what they are.
Okay, there are 3 types of government-backed loans. Want to tell me what they are?
Well, the first one is FHA, which is Federal Housing Administration. And the second one is the VA. If you're veterans, thank you for your service. And the third one is the USDA, which is United States Department of the Agriculture. No?
Right. So this is just a generality about the 3 of them. We are going to break down them a little bit more in a different video. But for now, they do have, for your credit score, it can be more flexible. It will be low. FHA is definitely lower. VA can be lower than conventional loans. So your credit can be lower. So that is a great thing to say. What else?
Well, USDA is a little bit exception because the USDA wants definitely 640 or 660, depends on where you're going. And what about the loan limit?
Now, before we get to that, down payment, FHA can be 3.5%, VA and USDA can be 0% down. So you can get a house, walk in without paying anything with these homes other than closing costs.
And as my wife said before, the FHA usually, if you want to get a large amount of the mortgage, you need to go the conventional route. That's meaning that it depends on the region that you're living and also varies with the loan program.
There's limits. Oh, yeah. Now, advantages. There are lower down payments. They are typically easier to qualify for. And there are certain benefits if you fit into one of the categories, like you're a veteran, your credit is excellent, and you want a USDA loan. There are benefits to these programs that maybe you should think about. What are the disadvantages in general?
disadvantage is a mandatory mortgage insurance. For example, even if you put 10% for FHA loan down payment, your PMI is not going to fall off, and it's going to fall off after 10 years in the
Never
year,
fall off with FHA.
if you put 10%, it falls at the year 11. Okay, what else?
There are specific types of properties in certain situations, and there are additional fees with these loans. We talked about it. So understand that conventional and government-backed loans are definitely the most common options people use. Mm-hmm. There are other options out there. So if you're in an other option situation, please ask us. We can provide that information. But we just want to say we need to find out which loan is best for you.
Exactly. And don't forget to call us at 252-327-3357. Also, write us a comment. We love to hear from you, and see you in the next podcast and video.